Welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I have Dave Glaser, CEO of Dwolla. Dwolla is a digital payment solution offering third parties the ability to provide payment processing in a streamlined, unified way. And with that, here's my interview with David. Dave, thanks for taking time today.
Hey, Jason, thanks for having me.
My pleasure. So, Dave Glaser of Dwolla. Tell us about Dwolla.
Yeah, Dwolla is the leader in the United States for B2B enterprises processing account-to-account payments. There's a lot to unpack there, and I'm sure we will.
So that's incredibly simple an explanation, and it's going to be a lot of questions about how that is the case, both in terms of the B2B payments and the challenges there, but also about how you're the leader there. Anyway, before we go there, tell me about the journey. How did Dwolla come to be?
Sure. Dwolla was started by a founder, a guy named Ben Milne, over a decade ago, and he had the vision of making payments simpler and less expensive for consumers and small businesses, especially. And when I say especially, he really focused on local small businesses in towns across America. The vision was great, and we got a great start. What was foundational about the solution that the team built at that time was that it was built on the existing U.S. banking system. So it leveraged what we call the ACH network in the U.S., where local banks could be tied together via an API or an application programming interface, which is a dozen years ago was relatively new to the banking community in the U.S. It had turned out we were used to paying for credit cards or cash, but not electronic checks, if you will, at the point of sale or at small businesses. Ben saw that there was a way to bring APIs to the banking system to leverage what was the 50-year-old ACH system in the US, but in a new and modern way. Now, over the years, we've changed course and pivoted a little bit, leveraging our strengths and finding where our fit was best for significant growth. We didn't win in the space of providing payments for consumers and small businesses. Companies like PayPal and Venmo, we might argue, and even Cash App are winning in that space. But Dwolla found its area of focus in developing that API for the banking network and offering it to innovative financial technology businesses that are inventing new platforms to disrupt industries, and then also bringing the same solution architecture and the same solution benefits to existing business that are digitally disrupting or digitally transforming themselves.
Excellent. All right. A couple of things there. So you go way back to the point where it was just the normal processing systems that existed. And instead of waiting for everybody to evolve APIs, you said, you know what, this is the direction it's going. We're gonna help develop that and basically start just giving it away effectively or accessible.
Yeah, that's right. We very low priced access to the system. Of course, the ACH system was very low priced at the time as well. So it was instead of merchants paying 3% to process cards, or waiting many days to process paper checks or having to handle cash, we could basically make the banking system seem instant and the payment method seem instant, and it would cost very little, just a few cents.
I appreciate the term seem being used in there because unfortunately the banking systems aren't instant, but there are players like you who can make it seem instant to the rest of us. So let's not get into the difficulties of that space. Okay. All right. Talk to me about the original. So basically the original pitch was pretty straightforward. I think you guys were early to that space, right? So it was a novel approach, right? Talk to me about the friction in terms of the evolution. You had to make that pivot to the newer age of APIs and everything else that was going on. Was that in large part due to disruptive players in the space, or was that something you saw coming along the way?
I think at the time it was due to disruptive players. The company was looking to grow and scale. PayPal, with their advantages, building the consumer brand that they did on eBay and in an online space, just grew faster even in the small business point of sale space. And then, of course, Venmo as well. Once PayPal acquired Venmo and started distributing that at their large scale, they just had a bigger scale to operate from because PayPal started in the mid-90s at the dawn of the internet, mid to late 90s at the dawn of the internet, and just really grew. And they had that acceleration happening. And as they switched to consumer, there was no way for Dwolla at its entry point to really scale and beat them. But like I said, the technology that was built at the time was started to be recognized by these fintech innovators that were starting to build platforms, again, not just for point of sale retail, but more for online marketplaces and insurance companies and financial advisors, et cetera, at the time. And so that's where the company really started to focus. And then I'd say over the last 5 years, with fintech really taking off and with so much happening during COVID when we needed remote access to funds and things like real estate closings, the idea of account-to-account processing and account-to-account processing over the cloud and in apps has really taken off in the US. And maybe we can talk about it a little bit more. That it's this theme about account-to-account processing is actually a global theme that's happening in countries and regions around the world. And it's interesting that it's happened in the US at a slightly different pace and scale.
Yeah, I'll come back to the US in a second, but I want to touch on something a little bit first. The contrast the consumer and enterprise space, I got to think, again, very different because you're winning every battle, one large company at a time versus consumers by consumer, right? Unless, don't get me wrong, you go to a payment, you go to a checkout, you're using whatever the heck is there, right? But you want to try to, I think people forget that it took things like Beanie Babies for PayPal to take off. Right, that's the reality of it. It was truly a consumer payment processing, just like Venmo was a consumer-driven payment processing thing. I got to think that the other piece of this has to be that, especially looking at B2B, I think the fraud burden's got to be not quite as intense. Is that a fair statement to make?
Yeah, it's a different level of intensity. When a payments provider is providing services directly to consumers, it is there is a lot of responsibility for that payments provider. Even if you think of card issuing, the card issuers, which are mostly the banks in the United States and around the country, they have mass amounts of people that deal with those consumers. They take applications from consumers. They handle disputes from the consumers. They handle fraud with merchants and consumers. So anyone issuing a payment method to a consumer, whether it's a card or an account-to-account, bank account, based solution, there is a high bar of customer service from all of those perspectives, including fraud. Now, with the pivot that Dwolla made 5-6 years ago, right, our responsibility towards making sure the system is safe from fraud still exists, but our responsibility is primarily as a B2B provider. So we now sell and service businesses that are interfacing and servicing with those millions of consumers that are in their networks. Our responsibility is a little bit less in that we're a B2B provider today as opposed to a B2C provider.
You're more the pipes in the background versus the front end. Is this real or not? I get it, the validation. So that's what I meant by the intensity is a little bit different. Okay, let's go back to the statement you made about how things are happening in the US. Now, I'm going to make a statement about, I did a series on open banking a while back, and frankly, I'll just make a statement on my observations. I find that the US versus European models are like diametrically opposed, right? You have a regulated top-down governance of how this is going to work versus, as usual, the US free market, let's figure this out and break stuff model. I think, is that a fair assessment? And if so, like, how do you think that's impacted you where you are basically to your benefit or detriment?
I think on the surface, you're absolutely right. That's what we're seeing happening around the world. And Europe is a great example where regulators stepped in, saw an opportunity to level a playing field that seemed to be being dominated by the card brands. Merchants and consumers were paying higher and higher fees, and there weren't good alternatives, even though there are dozens and dozens of banks across Europe and in the countries that make up Europe and even the UK. So what the regulators did there, that said that, hey, we've got this wide assortment of countries that make up the EU and even partners of the EU. Let's create a standard by which merchants can interface with that banking system and take advantage of lower costs, lower fees, maybe lower prices. So they created a set of standards through regulation that made it very fast and that I should say that allowed innovators a faster track to access those rails because they created it from scratch. Now, in the US, you're right, it's been different. It hasn't been a regulated model. It's been an innovative model where in the US, the same challenges have existed. Costs are high. Card brands, the duopoly of the card brands have really kept other competitors out. However, we've had this open banking system in the US, as I mentioned earlier, called the ACH system. It's a system interconnected banks, almost 10,000 banks and community banks and credit unions that are interconnected via a large network. The challenge in the US, though, is that network was 50 years old and that it was a file-based system. So we didn't have the same access. We as innovators didn't have the same access to those interfaces in the US. Now, the regulators didn't say, hey, we're going to create a new API and rules by which we can use that in the cloud or use the ACH network via APIs. So that's where the differences are today. It's like the driving forces are very similar into why account-to-account payments are becoming important and why open banking themes are important in both countries or regions. But the drivers that are bringing us to probably what will be a similar point have been a little bit different. We're catching up fast, I should say.
And another kind of almost uniquely American experience there in that regard, because let's face it, ACH, when it was conceived of and implemented, it was never foreseen as like an open banking protocol. That term didn't even exist, right? It was, let's just make this work so that we can actually have this this money change hands. And I think the key thing is the level of competition and openness in the US, basically, for lack of a better term, made it an open protocol, right? Like effective, like not fully, but in practice, somewhat of an open protocol. Whereas other jurisdictions, like the one I live in, large players and who basically control them, who have regulatory capture, have largely used it have been gatekeepers. Have effectively been gatekeepers, preventing the startups and other companies from getting into that system and been a real bottleneck. Again, uniquely, and I hope you appreciate it, uniquely almost American experience in that it was never intended for that, but the competition angle really kept it open and set the groundwork for this.
Yeah, you're right. As we started to make money more digital, even though I guess we didn't think of it as digital money in the 50s and 60s when the ACH network was dreamed up, we realized that I might need to write a check. I'm from Pennsylvania. I might need to write a check from my Pennsylvania bank to somebody that lives in California or South Carolina. That check needed to be exchanged between two different banks, but in the same country. They were all sponsored by using dollars, the denomination, and sponsored by the Federal Reserve Bank and the U.S. Treasury. So there needed to be a way for us to send what was initially almost like the initial credit card, right? Because when we write a check, it's like we're extended credit until that money actually moves 3 to 5 or more days once the check is sent and cashed and the money moves. So yeah, that was a way to more easily do that. It's at the beginning to allow banks to exchange money and then allow businesses to do large scale business to business transactions. And it's just continually innovated. It started with more mainframe to mainframe connectivity between big banks and big businesses. And now we've democratized it as technology has allowed us to. And now we're leveraging the internet and cloud-based systems and modern apps on our cell phones. And we fully expect to be able to exchange money in lots of different ways. And why wouldn't we exchange it as easily with our bank accounts as we do with now credit cards or even cash?
Absolutely. All right. That's where you've been. That's where you are. Talk to me about where you're going. Where do you think open banking is going, or just these initiatives are going? And how do you think you're going to evolve along with it?
Yeah, so we see these themes accelerating, if anything, whether it's in the U.S., but certainly in the U.S. And I should say that's Dwolla's focus. Our focus is bringing the best account-to-account solutions and open banking / embedded finance solutions to businesses, large and small, in the U.S. Now, at some point, we'll extend beyond the U.S., but there's so much opportunity in the U.S. right now for businesses to take advantage of these solutions. That is definitely our focus right now. And so what does that mean exactly? What that means is, as mentioned, right? So we're seeing more and more businesses digitally transforming. So we talk about some of these businesses that are 20, 30, 40 years old. They're still using that file-based ACH system. Mm-hmm. We see a tremendous opportunity as those businesses start to digitally transform their systems and their people and their processes and move off those older systems to the new modern system, the app-based, the cloud-based systems. So Dwolla wants to be there to provide those account-to-account based solutions for all the reasons we've already described. It's lower cost, it's fast, mm-hmm. It's competitive, and more ubiquitous than even the card brands.
Yeah, I think it's also in a lot of ways. It's funny. So incumbent businesses tend to have to follow consumer expectation over time. And what I mean by that is that you ask anyone, how long should this take? It's like, why does this take any time at all? I don't get it. It should literally be like, I hit a button, you say yes, and it's there, right? And there are some challenges to that. But a counterpoint to that, and I've seen this said and heard many times, is that unfortunately for a lot of these smaller sized businesses as well, or at least banks that are processing this stuff, the fees they charge for a lot of the ACH work have become a profit center to some degree, right? So you have this push-pull, right? There's efficiencies that they can gain out of this that would definitely be to their benefit and expand their business, but you always have that short-term friction of cost potentially losing a revenue source in exchange for a cost savings. Curious, like thoughts on what it takes to break through with that for some people, or is it just leaders are going to lead, laggards are going to lag, and they'll get through it eventually?
Yeah. Those are great points. There's a few sort of themes that maybe I can draw out of what you're suggesting there. One theme is that banks, who are maybe the obvious players in the ecosystem that could provide the modern tools to allow innovators to help money move fast and to make it a seamless consumer experience, they are exactly the way you described. They are not nimble. They generally aren't innovative. They're not building the most consumer-friendly systems and innovator-friendly systems, I would say. Even though some of the large banks, they really try and they have money to invest, they're still usually behind, and their bureaucracies creep in and get in the way of moving fast and creating delightful consumer and business experiences. So that's where we've seen sort of fintechs step in, these fintechs that are financial technology platforms that can move faster and create these overlays to the banking infrastructure. At Dwolla, we work very closely with a number of banks. In essence, we connect all 10,000 plus banks in the US, but we work with a handful very closely to tie all that together. And that also tends to be one of our biggest competitors is those banks. They're trying to compete in that space. But another theme that you point out is what are the real motivators by the banks? And what I've learned in my time in this space over the last 3 to 5 years, really focused on open banking in the US, is that banks are primarily driven by deposits. That seems to be the number one guiding force for banks, where there's all these things happening in the ecosystem. At the heart of it, they get paid based on deposits and the interest they receive on deposits and the fees that they receive on the transactions around those deposits, or interests that might be earned from loans that they grant that are based on the ratio of their deposits. So deposits are always at the core for banks in the way they think about things. So when they do add value-added services to their networks, but it's not the primary driver, the primary incentivizing force for bankers.
Yeah, it's something's going to drive it. And it's absolutely right. It's the core business at the end of the day, right? Everything else a bank does basically stems from either deposit taking or getting people into deposit and then selling something else. So it's not surprising. All right. So basically, yeah, that's the bank side of it. Let's talk about the business side of it. Are you seeing anything innovative on the other side of it with the fintechs you're starting up? Any trends? What are they demanding from you? Do they feel like you've offered up a slate of APIs that meet their needs? Where are they driving you with their consumer demands or their enterprise demands, that is?
Yeah, there's two areas. One is another one of these themes that you've mentioned. One is what we call faster payments. In the US, we'll call it, there are two systems that provide faster payments. There's RTP, or real-time payments, and the FedNow system. Another is the concept of these open banking tools. So when I think of embedding financial systems or payment systems inside these fintech apps and platforms, those are the two things that our customers, our software developer customers, care about. They want to move money fast because everybody just expects that when I say I'm going to pay you, you're going to get paid. So fast is important. And then the other theme is the concept of open banking really has 3 legs to the stool, if you will. So there's 3 pillars that make up open banking. There's the banks that we've talked a lot about. There's these money mover API processors that we've talked about, like Dwolla. And then there's also these what we'll call data aggregators or open banking facilitators, companies like Plaid and Finicity owned by MasterCard and MX and Tink owned by Visa. And there's a number of others in the US and around the world. What they're doing is they're providing access to information about bank accounts. So the 3 players are banks, money movers, and data aggregators. And when these financial technology companies, software platforms, or any business trying to evolve themselves to take advantage of these tools, they have to stitch all those together. They have to work with their bank, they have to work with their money mover, and they have to work with the data aggregator. So what we're focused on is bringing both of these trends together. We want to provide the traditional ACH tools, the new faster payment methods and tools, as well as the open banking tools directly from our platform. For the first time through an API, Dwolla will be the first company that can provide all of those tools. And we're going to make some major announcements this quarter of 2024, the beginning of 2024, about how we're going to do that. And that's really going to set up the evolution for how we're going to continue to win in this space by being that one-stop shop for all things open banking and embedded finance for B2B companies.
Excellent. You heard it here, people. If you're in this space, pay attention for announcements later in Q1 of this year. Excellent. So before we wrap up, there's 3 questions I asked everybody in positive note. The first one is, if you had one wish for something to change in your company, the industry as a whole, what would it be?
Ooh, put me on the spot.
Everyone says that.
I wish there was a way for us to instantly travel. We've become a remote first business, as many businesses have over the last 7 years. And our employees love that. I love that. Even as CEO, I love being remote when I want to be remote or need to be remote. And I realize how important it is for us to be together. When we're physically together, I think we're probably at least 10 times more productive, and we build relationships 10 times faster. So if there was a way where we could ignore air travel and be physically together, or at least feel like we're physically together more often, that's something that I wish for.
I'll add, not pay for an office lease at the same time on top of that. Let's be honest.
Yeah, office lease, not pay for the airfare.
Yeah, I've got a micro version of that in my practice. And it's one of these things where we'll still get together for social outings. But we should try. We try to get that up to once a quarter. We haven't quite got there. But yeah, I think I've heard this many times with other businesses too. I think it's just making people try to realize that we need to focus on the best of what that environment's for, right? Letting people work from home is just productive in general, as we've seen with productivity numbers. But when it comes to team collaboration, in person is definitely more valuable. So I think being more purposeful when people are in the office is valuable, but it's a struggle. And I agree with you. I wish I could wave a magic wand and have today be the day and not to worry about people getting someone else to pick up their kids from school. If that was the case, right? So challenge. It's challenging. Second question has been, what's been the biggest challenge in getting the company to where it is today?
I think the biggest challenge has been competition. I think the payment space is so competitive, and businesses, especially startup businesses in this space, have to be very efficient, very focused, very driven. You have to hire the best people, the most passionate people. You have to strike the right partnerships. You have to get really lucky about being in the right space at the right time and building those connections. And you can't squander time or any other resources, whether they be, human or financial. So competition in space is fierce.
Excellent. And then the last question I have for you is, what keeps you getting out of that morning? Let that up. So what keeps you getting out of bed every morning to keep on fighting the good fight that is running this business? What drives you?
I love it. I love the payments industry. I've been in the payments industry for more than almost 25 years. I started with CyberSource at the dawn of the internet. I was working with global enterprises, solving interesting payments, fraud, and security problems. Then we became part of Visa, and I got to help build that business out internationally. Then I had the chance to work with WorldPay, based in London. Got to see the world with my family. And built an amazing business that went public on the London Stock Exchange, that was acquired by an even larger payments company that became a global behemoth. Then I got to spend time for a few years at MasterCard, helping emerging markets to build innovation through QR platforms and tap-on phone systems and payment facilitator systems. And now today at Dwolla, I get to bring account-to-account payments and open banking innovations to the US. I get to work with super smart people. I get to work on these amazing challenges and face that fierce competition every day. And I can't wait to get out of bed every day to do it.
Excellent. Thank you so much for taking the time today, and keep up the good work. And I guess everybody's going to keep their ear to the ground and to listen up for the announcement later this quarter.
Absolutely. Thanks a lot. Great to be here.
So that was my interview with Dave Glaser, CEO at Dwolla. Hope you enjoyed that, and I hope you found it insightful. So if you're in the market for a B2B payment solution, take a look and again, pay attention to whatever they're going to announce later this quarter. As always, if you enjoyed this podcast, please leave a review on Apple Podcasts, SoundCloud, Spotify. And until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.